Hey everyone, welcome to another deep dive. Today we're going to be looking at KNR Constructions Ltd. We've got their Q3 FY25 results and their investor presentation. And to add a little bit of historical context, we're also going to be looking at an earnings call transcript from Q2 of FY23. We're going to be trying to figure out where KNR is today and where they might be headed in the future, particularly in the context of India's very dynamic infrastructure landscape.
Yeah, it's a very fascinating space to be in right now. Companies like KNR are really expanding their footprint. It's not just about roads anymore.
Yeah, absolutely. And that's one of the things that really jumped out at me, looking at these sources, was just how much they're expanding, especially outside of that sort of traditional highway sector. For example, in January of this year, they secured two new irrigation projects in Telangana, and those are worth a combined 5,261.8 million rupees. And that's on top of their already pretty impressive existing order book.
Yeah, for sure. That move into irrigation, that really shows their commitment to diversifying their portfolio.
Absolutely. And speaking of big numbers, there's this arbitration claim from one of their associate companies, Patel KNR Heavy Infrastructures Ltd. It's for 355.7 million rupees. When I saw this at first, I thought, oh, is this a problem? But it turns out it's actually good news for KNR.
Yeah, so they've actually booked that claim amount as revenue, and they've recognized an even larger sum as other income from the interest on that claim. So 1,035.4 million rupees.
So it's a win financially, but it does kind of make you wonder, were there some maybe behind-the-scenes issues with this project?
It does raise that question. I think it's something to keep an eye on as we move forward to see if this is maybe a sign of things to come or just a one-off. Now, shifting gears a little bit, let's take a look at the company's overall revenue picture.
Yeah, revenue, that's the lifeblood of any business.
Well, their standalone revenue actually decreased year on year by 18% in Q3 of FY25. However, if we look at the consolidated revenue for the first 9 months of FY25, that's actually up by 25% compared to the same period last year.
So kind of a mixed bag when it comes to revenue. What do you think is driving that discrepancy?
Well, if we take a look back at their Q2 FY23 earnings call transcript, management was already talking about some headwinds. They were seeing a slowdown in projects from the National Highways Authority of India, the NHAI as it's commonly known. And they were also talking about facing increased competition in that space.
So is it possible that, that slowdown in standalone revenue is a direct result of that? But then you see the consolidated growth coming from these other areas, like those irrigation projects that we just talked about.
Exactly. It really seems to indicate that their diversification efforts are starting to bear fruit. They're tapping into sectors that may be less sensitive to that NHAI slowdown.
That's a good sign. One thing that really stood out to me was the improvement in their EBITDA margins, both on a standalone and consolidated basis.
Absolutely. That means that they're getting better at converting revenue into profits, which is really a key indicator of operational efficiency. And their investor presentation highlights some of the factors contributing to that. Things like their in-house construction equipment and a strong and experienced execution team.
So it's not just external factors, they're really streamlining internally as well. What does that mean for their order book? What's the backlog of projects looking like right now?
As of December 31, 2024, their order book stood at a very healthy 38,884 million rupees. And it's a pretty diverse mix. You've got roads, irrigation, and pipeline projects. And interestingly, all of their current projects are concentrated in South India.
So regionally focused, but they've also secured two new road projects, right? And those aren't even factored into that order book number yet.
You're talking about the two hybrid annuity model or HAM road projects. Those are worth a combined 12,000 million rupees. And HAM projects are really interesting because the government shares some of the risk with these, which makes them attractive for companies like KNR. So if you factor those in, their total order book's value jumps to a massive 55,174 million rupees.
Wow, that is quite a jump. Clearly, they're not slowing down.
Not at all. And this kind of leads into another interesting aspect of their growth strategy, which is partnerships. Remember back in that Q2 FY23 earnings call, they talked about working with companies like Adani and Cube Highways. Now, Adani is a huge name in Indian infrastructure, and Cube Highways specializes in operating and managing these big highway projects.
So they're not just going it alone, they're really teaming up with some major players. I imagine that's a good way to tackle those larger, more complex projects, especially as India really kind of doubles down on its infrastructure development.
Absolutely. It's all about leveraging each other's strength and expertise. Now, before we get too far into the weeds on their future plans, I think it's worth taking a step back and looking at the bigger picture here. What's the state of the infrastructure sector in India overall? Is this a good time to be in this business?
Yeah, that's the million-dollar question, isn't it? We know India has these ambitious plans for infrastructure development, But are there any kind of headwinds that KNR needs to be watching out for?
Well, it's definitely a dynamic sector. There's huge potential for growth. The government's pouring resources into these projects, but there are also challenges, things like increased competition, funding constraints.
So it's a bit of a balancing act?
Yeah, it's like navigating a winding road. You've got those scenic views, but you might hit a pothole every now and then.
I like that analogy. So how does KNR's history and their transition from primarily an EPC player to one that has a significant BOTAM portfolio, how does that fit into all of this?
Well, that shift to both hand projects is significant. It really shows that they're not just aiming for these short-term contracts. They're looking at long-term involvement in these projects, which can be very lucrative. And, speaking of history, one thing that really stood out to me was their completion of the Bijapur-Hungan Road project back in 2012. They actually finished it 11 months ahead of schedule.
That's impressive. It definitely speaks to their project execution capabilities, which they highlight as a key strength in their investor presentation. And I imagine that that history of successful project completion is probably a big reason why they're attracting partners like Adani.
I would agree with that. Now, it's important to note that it hasn't been all smooth sailing. If we go back to that Q2 FY23 earnings call, they actually mentioned some payment delays from the Telangana government. In fact, they had a significant amount, around 977 crore rupees, due to them for one particular project.
Wow, so even a company as established as KNR isn't immune to the bureaucratic hurdles that can sometimes plague these big infrastructure projects.
Unfortunately, that's the reality of the sector. Government projects often come with longer payment cycles, and that can really impact a company's cash flow.
And it's not just about those delayed payments. They also talked about the fierce competition in the market. They mentioned some ham model beds coming in at incredibly low margins, like 20–25% below their estimates.
Yeah, that's why those diversification efforts are so crucial. By not relying solely on those NHAI projects and branching out into these other sectors, they're really spreading their risk.
It's like building a safety net. So it seems like KNR is facing some of the same pressures that you see across this industry. But they're actually trying to stay ahead of the curve. They're diversifying their portfolio, forming these strategic partnerships, and even going after those larger, more complex projects. It's quite a proactive approach.
It is, and their focus on operational efficiency as well, which is reflected in those improved EBITDA margins. It's another positive sign. They're not just chasing growth for the sake of growth. They're doing it strategically and sustainably.
Now I want to go back to their work with Adani for a second. I mean, that collaboration really stood out to me.
Yeah, it's a real sign of their ambition and their ability to attract those top-tier partners. It also highlights their strategic approach to growth. They're not just relying on their own capabilities. They're really looking to form these alliances that can help them reach new heights.
The whole is greater than the sum of its parts, right? By combining their expertise with Adani's resources and market presence, they could potentially unlock all sorts of new opportunities.
Absolutely. It's a classic win-win. And if we connect this back to the bigger picture of India's infrastructure boom, it really suggests that KNR is well-positioned to capture a significant share of these upcoming projects.
They're playing the long game. Now, I know our listeners sitting there thinking, this is all very interesting, but what does this mean for me?
That's the key question, right? For someone like you, who's all about gaining knowledge efficiently, this deep dive gives you a really solid understanding of KNR's position in the market and their potential for future growth.
It's like a crash course in, not of KNR, but in the complexities and dynamics of the Indian infrastructure sector as a whole.
Exactly. It's about understanding strategies, the challenges, and those incredible opportunities that exist in this rapidly growing market.
All right, so let's do a quick recap of what we've learned so far. We saw a dip in their standalone revenue this quarter, but their strong order book, their diversification efforts, and their focus on operational efficiency, all of that seems to suggest a positive outlook for the future.
And let's not forget those recent wins in the irrigation sector. Those add considerably to their already pretty impressive backlog of projects.
They're on the move. They're adapting to the changing market conditions. They're forming those strategic partnerships and really positioning themselves for continued success.
It's a really smart and calculated approach.
So this leads us to a thought-provoking question for you to ponder as we move into the next part of our deep dive. Given India's massive infrastructure plans, can KNR leverage their strengths and these strategic partnerships to really capitalize on those opportunities and continue their growth trajectory?
That's something to think about as we delve deeper into their financials and analyze their performance in even greater detail. Join us for part 2 of this KNR deep dive.
Welcome back to our deep dive into KNR Constructions Ltd. We're going to roll up our sleeves and dig a little deeper into their financial performance. I always say the numbers tell a story, and we're here to try to decipher it.
Absolutely. We're going to be analyzing some key metrics, assessing their capital structure, and really seeing how they stack up against some of their competitors in this Indian infrastructure space.
All right, perfect. So let's start with revenue. Now, we talked about that dip in their standalone revenue for Q3 FY25. But if you look back at their historical financials, you actually see a very clear upward trend in revenue over the past decade.
Yeah, their standalone revenue has consistently grown from 7,125 million rupees in FY10 to a substantial 40,910 million rupees in FY24. So that's a pretty significant increase, and it shows a strong track record of growth despite that recent quarterly fluctuation.
Yeah, definitely. It really seems like they've been able to navigate this market effectively and capitalize on some of those growth opportunities. Okay, so let's talk about profitability. EBITDA is a key metric here for those who may not be familiar. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. And it really gives us a clear picture of their operating performance.
Right, and their EBITDA has also been on a pretty steady upward climb from 1,121 million rupees in FY10. It surged to 7,010 million rupees in FY24. So this indicates that they're not only generating revenue, but they're also effectively converting that into profits.
That's a great sign. And what about their EBITDA margin? So that's EBITDA as a percentage of revenue, which basically tells us how much profit they're making for every rupee they earn.
Their EBITDA margin has also been improving steadily. It rose from around 15.7% in FY10 to a very healthy 17.1% in FY24. This basically means that they're becoming more efficient at managing their costs and squeezing more profit out of each project.
So they're not just growing their top line, they're also improving that bottom line. Now let's switch gear a little bit and examine their capital structure. So this is all about how they're financing their operations and their growth.
And their investor presentation gives us a good look at their historical debt-to-equity ratio, which is a key indicator of capital structure. It basically tells us the proportion of debt they're using compared to their shareholders' equity.
Right, a high debt-to-equity ratio can sometimes be a red flag because it means they're relying heavily on borrowed money. So what does KNR's ratio look like?
Well, in the early years around FY10, their debt-to-equity ratio was about 0.25, but over time it's significantly reduced, reaching almost zero in recent last.
So they've been actively deleveraging their balance sheet. That's a positive sign, right?
Absolutely. It means they're not overly reliant on debt financing, which reduces their financial risk and gives them more flexibility to pursue those growth opportunities.
Yeah, it's really impressive to see how they've managed to reduce their debt while still achieving significant revenue and EBITDA growth. It really shows a commitment to financial prudence.
Yeah, it speaks to their disciplined approach to financial management. They're not just chasing growth at any cost. They're doing it in a sustainable way.
Now let's talk a little bit about their competition. How do they stack up against other players in the Indian infrastructure space?
Now, while we don't have specific competitor data in our sources, the Q2 FY23 earnings call transcript does provide some insights. Management highlighted that the market is highly competitive, especially for those HAM model projects.
Right, and they talked about some bids coming in at 20 to 25% below their estimates, which really seems to indicate a pretty fierce battle for projects and potentially shrinking margins.
Exactly. So it means that KNR needs to be very sharp and strategic in their bidding process. To remain competitive, they really need to carefully assess those project risks and make sure their bids are both attractive and profitable.
It's not just about winning projects, it's about winning the right projects at the right price. So I imagine their expertise in project execution and their strong relationships with clients will be really crucial in this environment.
Absolutely, they need to leverage those strengths to differentiate themselves and really secure those projects that align with their strategic goals.
Now, we've talked a lot about KNR's standalone financials, but let's not forget about their consolidated financials, which include their subsidiaries and associate companies. These can provide a more comprehensive picture of their overall business performance.
Right, and their consolidated revenue for the first 9 months of FY25 actually increased by 25% year on year, so that's a sign of healthy growth, driven by those contributions from their Botham projects and their diversification into sectors like irrigation.
That's impressive. And their consolidated EBITDA margin is also looking pretty strong, standing at 37.2% for the same period. So this really suggests that their subsidiaries are performing well and adding to the overall profitability of the group.
Yeah, it shows that their growth strategy is working effectively. Across different areas of their business, they're diversifying their revenue streams and leveraging their expertise in those various segments.
It's like they're firing on all cylinders, both on a standalone and a consolidated basis. They're growing their revenue, they're improving their margins, they're managing their debt effectively, and they're actively diversifying their business.
Yeah, they're demonstrating a really well-rounded approach to growth, and a commitment to creating value for their stakeholders.
Now let's dive into some of the specific financial highlights. From their Q3 FY25 results, I'm particularly interested in that arbitration claim that they received from Patel KNR Heavy Infrastructures Ltd.
Yeah, that was a significant event, for sure. They booked 355.7 million rupees of that claim as revenue and recognized a much larger sum, 1,035.4 million rupees, as other income related to interest on that claim.
So financially, it was a positive outcome for them. But, it does raise some questions about the nature of the claim and, its potential implications.
Right. It's important to understand the background of that claim and whether it might signal any underlying issues with project execution or even contractual agreements.
And speaking of project executions, the Q2 FY23 earnings call transcript did mention some challenges they were facing in that area. They highlighted those payment delays from the Telangana government, which were impacting their cash flow.
And that's unfortunately a common problem in the infrastructure sector. Government projects often involve these lengthy payment cycles, which can put a real strain on a company's finances.
And KNR mentioned that they had a substantial amount, around 977 crore rupees, due from the Telangana government. For one particular project, that's a significant sum of money tied up.
It really underscores the importance of effective working capital management and having a diversified project portfolio to mitigate those risks associated with payment delays.
And they even mentioned taking legal action to recover those dues, which, adds another layer of complexity and cost to the situation.
Right. It really highlights the challenges that even successful companies like KNR face when dealing with government bureaucracy and those contractual disputes.
Okay, so we've covered a lot of ground here. On KNR's financials, we've analyzed their revenue growth, their profitability, their capital structure, and, some of the specific financial highlights and challenges that they've encountered.
Yeah, we've gained some valuable insights, I think, from both their historical financials and the management's commentary during those earnings calls. And this information provides a really solid foundation for understanding their current financial position and their potential for future growth.
Absolutely. I think we've given our listener a really comprehensive view of KNR's financial performance, equipping them with the knowledge to really start forming their own informed opinions.
Yeah, that's what the deep dive is all about, right? We want to empower our listeners to become well-informed and insightful decision makers.
Now, before we move on to part 3, I want to touch upon one more important metric, and that's earnings per share, or EPS. This is a really widely used measure of a company's profitability from a shareholder's perspective.
Right, EPS is basically calculated by dividing the company's net income by the number of outstanding shares. So it essentially tells us how much profit is allocated to each share of stock.
So how has KNR's EPS been trending?
Well, if we look at their historical data, their standalone EPS has generally been on an upward trajectory, which is a positive sign for investors. It increased from 1.79 rupees per share in FY10 to 17.6 rupees per share in FY24.
Wow, that's a pretty substantial increase. It really suggests that KNR has been consistently creating value for its shareholders.
It does, however, it's important to remember that EPS can fluctuate from quarter to quarter due to various factors, things like one-time events or changes in accounting policies. So it's always crucial to consider that long-term trend and the underlying drivers of earnings growth.
Yeah, that's a really good reminder. And speaking of one-time events, the Q3 FY25 results were impacted by that arbitration claim that we discussed earlier.
Right, the claim boosted their other income, which ultimately flows through to their net income and EPS. So while it's a positive development, it's important to be aware of its impact when analyzing their EPS for that quarter.
That makes sense. I think we've covered a really comprehensive range of financial metrics and insights, giving our listener a really thorough understanding of KNR's financial performance.
Yeah, I think we've truly gone deep into their financials and really equipped our listener with a wealth of knowledge.
Now get ready for part 3, where we're going to shift our focus to KNR's growth strategy, their plans for the future, and some key takeaways for you. All right, so we're back for the final part of our deep dive into KNR Constructions. We've spent some time exploring their financials. You know how they've been performing. But now let's look ahead. What strategies are they using to keep growing in this pretty dynamic infrastructure landscape?
Well, they've laid out a pretty clear roadmap for growth, and one of the key elements is diversification.
Diversification, yeah, that seems to be a recurring theme here. It's like they're not just sticking to roads and highways anymore, are they?
Exactly. They're actively bidding on projects in a whole range of sectors, irrigation, urban infrastructure, even things like flyovers. They're not putting all their eggs in one basket, which is a smart move especially considering that slowdown in NHAO projects that we talked about earlier.
It's like they're creating a buffer, right? If one area kind of slows down, they've got these other projects to keep things moving.
Exactly. And those two new irrigation projects that they secured in January, those are a perfect example of this diversification strategy in action. They're tapping into markets that might be less sensitive to those fluctuations in the highway sector.
So they're spreading their risk, but they're also expanding their expertise at the same time. Makes sense. But diversification is just one piece of the puzzle, right?
Right. Another crucial aspect is their focus on partnerships and joint ventures. They've specifically mentioned working with companies like Adani and Cube Highways to go after those larger, more complex projects.
Strength in numbers. Teaming up with these industry giants gives them access to more resources, more expertise, and, more financial muscle.
Exactly. It's a way to share the risk and really take on those mega projects that might be too big to handle alone.
And let's not forget their internal strengths, too. They've got a proven track record of project execution, in-house construction equipment, an experienced management team. These are all valuable assets that give them a competitive edge.
Absolutely. They're not just relying on external partners, they're also investing in their own capabilities to really drive that growth. It's a really balanced approach.
So they're strengthening from within, but they're also forming these powerful alliances on the outside. It's like a two-pronged attack on growth.
I like that. And if we connect this back to India's infrastructure goals, they've got these ambitious plans for development. It's clear that KNR is in a good spot to really capitalize on the massive opportunities that are out there.
Right place, right time, right skills, right partners. It sounds like a recipe for success.
It does, but of course there are always challenges. We talked about those payment delays from the Telangana government and that intense competition in the market.
Right, those are real hurdles they need to overcome. But it seems like their focus on diversification, strategic partnerships, and operational efficiency seems to be a pretty solid plan to navigate those challenges.
Yeah, it's all about adopting, staying one step ahead, and so far they've shown that they're capable of doing just that.
So I know you've been listening intently, soaking up all this information about KNR Constructions. But let's distill it down a bit. What are the key takeaways here? What do you really need to remember?
Well, a few things stand out to me. First, KNR Constructions is a financially sound company. They're well managed. They've got a strong track record of growth and profitability. They've consistently outperformed the market. And they're really well positioned to benefit from India's infrastructure boom.
Okay, so that's reassuring. They've got a good foundation to build on.
Second, they're not afraid to branch out and explore new opportunities. They're diversifying their project portfolio, expanding beyond just roads and highways into these other promising sectors. This reduces their reliance on any one single market, and it creates multiple avenues for growth.
So they're not just a one-trick pony. They're really becoming a more well-rounded player in this infrastructure space.
Exactly. And third, they're forming those strategic alliances with those industry giants to go after those bigger, more complex projects. This allows them to really scale up their operations, access those additional resources, and compete for those mega projects that are really driving India's development.
They're leveling up their game.
Yeah, and finally, they're laser focused on operational efficiency, delivering projects on time and within budget. This is a really crucial differentiator in a competitive market, and it's a key driver of their profitability.
It's all about execution, right? And they've proven they can get things done.
I think all of these factors combined suggest that KNR is a company with a bright future. They have the financial strength, the strategic vision, the operational excellence, and the market awareness to really thrive in India's rapidly evolving infrastructure landscape.
So to our listener out there, you've been eager to learn. You want to make informed decisions. You now have a really solid understanding of KNR Constructions. You've got the insights, the data, the context. Now it's up to you to connect the dots and draw your own conclusions.
And remember, the business world is constantly changing. What we've talked about today is really just a snapshot in time. So it's important to stay curious, keep learning, and, do your own research.
Couldn't have said it better myself. The more you know, the better equipped you'll be to navigate the complexities of this business world. And that's what the deep dive is all about. We're here to give you that knowledge, those insights, to make those informed decisions.
Thanks for joining us on this deep dive into KNR Constructions. Hope you found it informative and engaging.
And remember, knowledge is power. Keep exploring, keep learning, and keep diving deep into the world around you.